This is the Daily Market Comment for Monday, December 6th by Raf Boyajian. I'm Christina Marujos and thank you for joining us here at XM.com. After a gruesome 2 weeks, U.S. equities may be at a turning point as markets digest the growing expectation that the Fed will remove stimulus at a faster pace and amid encouraging signs that the Omicron variant is not as perilous as first feared. Stocks globally got caught in a selling frenzy after Fed Chief Jerome Powell indicated he was on board with the idea of accelerated tapering. Yet long-term rates have slid quite sharply over the past 2 weeks, with a 10-year Treasury yield hitting a more than 2-month low on Friday. This has been the silver lining for stocks with bloated valuations that are the most sensitive to increases in long-term borrowing costs, as the assumption is that early action on rates will avert the need for steeper hikes in the future. The biggest risks now are that markets become too complacent again about the virus threat, or if the Fed turns too hawkish and sets itself on autopilot for a spring liftoff in spite of the heightened COVID risks. For the moment, however, this could be another buy-the-dip opportunity, with S&P 500 futures gaining 0.7% in early European trade. In Asia, however, the mood improved only marginally as concerns about China's economic growth prospects continue to weigh. In contrast, U.S. economic growth remains robust. Although Friday's payrolls numbers for November were quite disappointing, the ISM non-manufacturing PMI for the same period hit an all-time high, putting the spotlight on the next CPI report due this Friday. With the Fed subtly ditching its transitory narrative on inflation, a rate hike in March or May is looking more and more likely, and this is helping the US dollar extend last week's gains even as risk appetite recovers slightly today. Elsewhere, the Australian dollar outperformed its peers, while the Canadian dollar was not far behind, firming to around 128 to the greenback after Friday's massive rise in employment. Both the Reserve Bank of Australia and Bank of Canada meet this week. The RBA meeting likely poses some downside risks for the Aussie, but the Loonie faces a hawkish surprise should the Bank of Canada bring forward its rate hike timeline. This was the Daily Market Comment here at XM.com. Have a great week.